What's up everybody, Nate here, and in case you missed it, President Joe Biden had a bombshell press conference where he talked all things economy, the Federal Reserve, his Build Back Better bill, and about his rapidly sinking approval rating. The press conference went on for a while and it has massive implications for how our economy is going to look in 2022 and how Joe Biden is going to fare in our next presidential election. So I don't know about you, but right now, President Joe Biden is pretty much up against the wall in terms of our economy and the pandemic. And in case you didn't know, inflation in our country has gone up rapidly over the last 2 years, with inflation hitting a new 40-year high of around 7% back in December 2021. But none of that even seemed to faze old Joey Biden, because when asked about his approval rating and all of the things that he's done in his first year and now his second year of his presidency, he basically said that he did not overpromise the American people on what he would give them. But it's pretty safe to say that we're facing a lot more now than we were facing when President Joe Biden was first inaugurated back in January 2021. So today I want to go over this press conference that Joe Biden had and kind of talk about all of the things that Joe Biden mentioned when it comes to the Federal Reserve, inflation, and our economy in 2022. But before I get into all of that, I need you to do me a quick favor and smash that thumbs up button below. I really appreciate that over on this channel. Thank you so much for doing that. Now let's go over everything that Joe Biden talked about in his most recent press conference. Number one, Joe Biden essentially said that he supports Jerome Powell, the chairman of the Federal Reserve, and the Federal Reserve in general, as they start to tighten monetary policy in the United States. Now, just a few months ago, President Joe Biden actually nominated Jerome Powell for a second term as the chairman of the Federal Reserve. And now in January 2022, he's going through nomination hearings before Senate and Congress in general. But here's exactly what he said when asked about the issue. The Federal Reserve provided extraordinary support during the crisis for the previous year and a half. Given the strength of our economy and pace of recent price increases, it's appropriate, as the Fed Chairman Powell has indicated, to recalibrate the support that is now necessary. So basically, the Federal Reserve and Jerome Powell have the green light from President Joe Biden to do whatever they deem necessary to start curbing inflation in the United States. And in case you didn't know, the Federal Reserve has had a lot of meetings about inflation over the last 2 years. The reason being is because inflation continues to rise in the United States. And what that essentially means is that prices are going way up almost every single month. But the kicker is the products that you're buying aren't really changing. It's just that everything is starting to become a lot more valuable, which means the price has to go up too. Normally that wouldn't really be a big deal, except for wages in the United States haven't really gone up either. Like in December 2021, wages went up by around 0.4%. Inflation for December 2021 was around 7%. So even though employers are paying people a lot more, real wages are starting to decrease. In fact, they went down by around 2.4%. So people are actually losing money right now, even though companies are starting to pay more. Which kind of creates its own problem with inflation, because now you have wages starting to go up, which means people can naturally buy more things. So they start doing that, and then as they buy more things, well, companies start to run out of a lot more things, so they have to start increasing their production, which comes at a cost. So now everything starts to cost more, and wages eventually need to go back up too to afford all of the new things, and you basically just have this spiral of everything costing more and people starting to make more money. Not really a good situation to be in. So the Federal Reserve is in charge of making sure inflation starts to go down in our economy. And one of the ways that they've planned on doing that is by raising their benchmark interest rates from effectively 0% up and up until people can just buy a lot less things. Lowering demand will mean that people can't buy things and inflation will naturally go down. It'll help our suppliers and companies start to put more things back on the shelves. But what President Joe Biden didn't talk about is if they do that too fast, we could actually see a recession in the United States this year. This is because we have rising inflation. So people are naturally going to spend less money because everything costs a lot right now. In addition, if you raise interest rates, well, that's just going to curb demand, because now people can't go out and get loans. They can't get a loan for a mortgage, for a car, and businesses have a harder time getting a business loan. That provides a ton of capital for businesses to go out and get more employees and invest back in themselves. But all of that is pretty much going to stop if the Federal Reserve raises its interest rates. And there is a lot less money in our economy right now because the Federal Reserve is turning off that money printer. They ran up their balance sheet to around $8 trillion over the last 2 years with all of their bond buying and asset purchasing on Wall Street. And in addition, the United States government has made the Federal Reserve print trillions of dollars in stimulus. All of that is ending. So 1, Americans have a lot less money. 2, inflation is going way up. And 3, it's harder to buy anything because rates are steadily rising too. So basically things are super fragile right now. And if the Federal Reserve moves too quickly, well, that could cause a recession that is really bad timing for President Joe Biden. I mean, next year is going to be an election year. Most experts agree that inflation and our problems that we're having in our economy are not going away anytime soon. So not only do we have inflation and a possible recession on the horizon, but Wall Street and our markets could get massively affected too just by the Federal Reserve's moves. But I mean, I guess whatever means necessary, right? Now, that's not to say that President Joe Biden is afraid of spending money. Now, he has been working on his Build Back Better bill for a long time now. He's been trying to get it passed through Senate and the House of Representatives, but it's been blocked by some Senate Democrats. Back in November, the Build Back Better bill was passed in the House of Representatives, but has been effectively blocked in the Senate. And normally, things get blocked by the opposing party, so the Republicans would be the ones that are blocking it. But this time, it's actually not the Republicans. It's somebody that's supposedly on Joe Biden's side, a Democrat named Joe Manchin. He's been blocking this bill and pushing the price tag down a lot. So originally it was around $2 trillion and it went down to around 1.8, and now we're sitting at $1.75 trillion. The Build Back Better bill is a social spending program, so it's going to cover all things like $555 billion to fight climate change, $400 billion for universal pre-K in the United States, $200 billion to secure 4 weeks of paid leave, and an additional $165 for healthcare spending. And there is a few other things. That is the bulk of what is in this bill. Now, with all of that being said, the bill hasn't been able to go through 100% at this point. President Joe Biden is convinced that Congress can pass specific portions of this bill without passing the entire thing. One thing that Joe Biden believes can pass right now is the $500 billion plus for climate change. He basically said that he's been talking to a lot of his colleagues and they would be in support of passing the $500 billion plus for climate change. In addition, when asked about the rest of the bill, Joe Biden said that, so I think we can break the package up, get as much as we can done now and come back and fight for the rest of it. I mean, I don't really know how long he plans on waiting for it, but that's sort of the plan right now. He also said that early childhood education could actually get passed as well. Now, this has been something that has been going on for a long time now. Universal early child care education, and sort of the way that it's been framed is that if you give this universal child care education for most parents, then they could actually send their kids to preschool a lot sooner. And that would have benefits like the kids are learning a lot more, a lot sooner, they're socializing, but also the parents can go to work. And right now we are in a great resignation, which means parents haven't really been able to work since the pandemic started. So in the short term, that could actually help our economy and start lowering inflation. So that's one of the other big reasons that inflation is so high right now, is because there is just a big labor shortage throughout the country and people aren't working, which means companies are producing a lot less, just naturally. So with only portions of the Build Back Better bill going through, what is Joe Biden saying that is definitely not going to make it into the final cut? Well, President Joe Biden said that 2 major things are not going to make the final cut of the Build Back Better bill. One is the enhanced child care tax credit, and the second is basically free community college. We've had the child care tax credits in the United States for a couple years now, all in response to the pandemic. The child tax care credits were a part of the American Rescue Plan that was passed back in April 2020. Basically, it allowed a lot of families to get their credit up front in monthly checks, and you could get around $300 per child. But now in 2022, those are basically gone, and they were included in the Build Back Better bill, but now they're getting cut, which means that additional hundreds of dollars that parents were getting from the American Rescue Plan is also going away. In addition, President Joe Biden talked a lot about free community college on the campaign trail, but now that is starting to go away too. So essentially how this would work is the first 2 years of your community college experience would be completely free and paid for by the federal government. Now it just looks like it's going to expand the financial aid opportunities that students can seek before they go to community college. For the child tax care credit, well, it looks like if it is passed in the Build Back Better bill right now, then it's only going to be a 1-year extension versus the 5 that was originally proposed. And think about it, that could be a huge worry on our economy too, because now if people want to go to community college or university or any secondary education, they're going to have to pay for that too. And right now, taking on debt is a big issue because prices are going up. It's harder to get money in general, and it's harder to hold on to that money because one big emergency could set you back for years. And that brings us to what Joe Biden said about his approval rating and if he actually overpromised everything that he said he was going to get done in his first year or his presidency in general. And basically he said he did not overpromise, mainly blaming a lot of Republicans for why he can't get his agenda passed. And he said that he's going to stay on this track. So he's going to continue to try to push all of the things he believes in and try to get his Build Back Better bill essentially approved. But in general, it has been a really tough and long term for President Joe Biden, and we're only in year 2. Just about everything in our economy, from energy prices like gasoline, natural gas, to the prices on the grocery shelf. Everything that you can buy right now has gone up in price pretty substantially. Gas is up by almost 50%, and housing costs are up by 3%. Meat, poultry, fish, and eggs is up by over 10%. And if you want to buy a new car right now, the cost to get a brand new car is over 10% more than it was back at the start of 2020. And that is just a few key areas in our economy. I'm sure you can come up with a list of your own of things that have gone up in price over the last 2 years. And you can see that reflected in the voters with a recent poll showing that 56% of voters actually disapprove of how President Joe Biden has handled our economy and country since he was elected. To which he responded, I don't believe in polls. I mean, it doesn't really look like the polls believe in you either. And that brings us to, well, how is this all going to affect our economy in 2022 and 2023? Well, in case you didn't know, the President of the United States has a lot of power, but not really enough power to stop inflation. You see, what is the technical definition of inflation? All inflation is when your monetary supply starts increasing. So when the Federal Reserve starts to print a lot more money, then naturally you're going to have inflation. Because there is so much money circulating throughout the economy, that means all of the money that's in the economy starts to become devalued. And your buying power starts to decrease too. And those are basic symptoms of inflation. And the other big symptom of inflation is when prices start to go up. Because everybody has so much money, they're able to go out and spend a ton of money. Spending is good. I mean, we need spending in the United States, but we don't need overspending. Overspending creates high inflation because now businesses have to account for more people buying more things. They have to make more. And in order to make more, they have to produce more. Production costs, shipping costs, and then paying more workers is going to come at a big cost for companies, so they start trickling those costs down to you and raising their prices. And the average price of everything in the United States has gone up by around 7% in December 2021. So basically something that cost you $1 at the start of 2021 now costs you around $1.07. And that's not really a big deal if you're only spending $1, but think about it. If you're spending hundreds of dollars, well, now you're adding $10, $20, $30, and even $50 more to almost everything you are buying. And again, President Joe Biden can't really do much about inflation, except for the fact that he wants to add to it by pushing a lot more of his Build Back Better bill. So he wants to get this social spending plan through. Right now, the price tag is $1.75 trillion. And that's actually down from the $3.5 trillion that it was originally estimated at. More money in our economy equals more spending, which means inflation would naturally go up, and our supply chains and our economy right now is still reeling from the effects of the pandemic. And let's not forget, the pandemic is still very much here. I mean, back in July 2021, we had an average case count of around 12,000 new virus cases every single day. But by mid-January, that number jumped up to around 1.7 million new cases. That in itself has massive implications for our economy, because if things get really bad again, well, then we might start seeing a lot less people start shopping even less. Which means our economy is going to shrink and continue to shrink while inflation goes up. That is known as stagflation. So our economy right now is in rough shape. But it's not all doom and gloom. There is a chance that the economy could recover very strongly in 2022 as well. It all really depends on what the Federal Reserve does with its interest rates and its money printing. Too much too fast can be bad for our economy. We could see markets crash, and we could see Americans start spending even less because there's just nothing to buy and everything costs way too much. That in itself could create a really bad problem for President Joe Biden, which could just increase pressure on Chairman of the Federal Reserve, Jerome Powell, and President of the United States, Joe Biden. And then they'll have to come up with a new solution to fix our economy. I bet you it involves money printing. But now I want to hear what your thoughts are on this issue. What do you think about President Joe Biden backing the Federal Reserve and Fed Chairman Jerome Powell basically saying that they need to do whatever they can in order to drop inflation? In addition, what do you think about the Build Back Better bill and some things being cut out of it, like child tax care credits and free community college? And finally, has President Joe Biden overpromised all of the things he said he would get done? Or is he still on track to have a really successful presidency? I want to hear your thoughts, so be sure to leave a comment below before you go. That's it for me, everybody. I hope you liked this video, and if you did, be sure to hit that subscribe button below. Be kind out there, and I'll see you all in the next one.